Welcome back. Now, at the half-year mark, DRDGold's headline earnings per share has shot up by 65%. An interim dividend of 30 cents has been declared, reflecting an increase of 50%. This thanks to a glittering gold price. Company CFO Riaan Davel joins us with greater perspective on the performance. Riaan, thanks so much for your time this afternoon. So, as mentioned, all key metrics are up, revenue higher, earnings trending higher, the group really benefiting here from the higher gold price. Take me through that performance as we get started.
Thank you for having me. You're quite right. The gold price is high, 26% up period on period. However, that must be backed up by producing gold. So we're very proud of our operating performance across both our operations, Ergo in the east and Far West Gold Recoveries in the west. Far West very much stable, tons-wise, increase in yield for the 6 months, so their gold sold slightly up. But Ergo, as we mentioned in our August results, we wanted the profile to look different. Obviously, we were a bit slow last year in starting to commissioning new sites, but we've done that now successfully, and so our tons are up significantly, and our rand per ton very much down 9% period on period. Obviously, that benefited from a different type of material that we mine, so large scale volume slime dumps, so less yellow machine costly sites that we had in the previous period, and also some benefit from our solar and battery project that were commissioned in the last couple of months. So we're very excited about that. So Ergo's costs are looking really good per ton, and as you know, obviously that opens up that operating margin for us. High gold price, costs under control, and all of that, as you mentioned, flows to our bottom line, headline earnings up 65% period on period. So we're very proud of that.
And I wanted to touch on, the operational performance of it all. And you just, touched on that, telling us that the production is up on both ends. But I want to look at your costs, which also slightly ticked higher. Just take us through some of the contributing factors on that front.
So overall, costs were literally inflationary increases, which is positive in the mining context. So I think 8% up cash operating costs period on period for the Far West. So that's inflation plus I think slightly higher than inflation on labor and security costs there. But the big win for us is on the Ergo side. So their cash operating costs for the period only up 5% period on period. And you can imagine if we drill down to electricity,
yes,
for that was only 3% increase, with volume up at Ergo 22% period on period, and with double-digit increases from Eskom. So you can really see the benefit of the type of profile that we want. So obviously, tonnage up. As a consequence, obviously, we know that it's lower grade that we mine on the large volume slime site. And that's why gold production and gold sold was pretty much flat for Ergo. But what it does do is that cost profile. So the rand per ton, cash operating cost per kilogram really improved. And as I've mentioned, that just opens up the margin for that operation with the gold price where it is, which is really encouraging. And as I said, that's what we wanted to achieve. So the cost profile to look different, and hopefully we look forward to more of that in the next 6 months of our financial year to 30 June 2025.
Now you touched on this at the top, that the company successfully connected its solar plant and battery system to the national grid. That of course just shielding you from high energy costs. I know the group is also looking to take advantage of wheeling, because there are times where the plant produces more energy than Ergo consumes. How far are you with those agreements, perhaps with Eskom?
So that's in the final stages of being put into place. And obviously, we've already seen some of the benefit. And as you can imagine, it's quite a complex system. So both the fact that we generate power from the solar panels, we store power through the batteries, we consume power directly into the plant, but then we also evacuate. And My understanding is there's two elements to that. So it's an offsetting element to Ergo's own accounts, and then the wheeling element to say other entities in our group, for example, Far West Gold Recovery. So all of that testing over the last couple of months has now happened with Eskom. And we're hoping in the next couple of months that the final reconciliations of accounts and obviously the optimization of that system will happen. What's also amazing to see, obviously we've moved out of a consistent load shedding period that we had up until March last year. And obviously with that battery size, we can maybe think to utilize that differently, where we previously would have looked at quite a large percentage of, let's call it backup storage, in the case that we want to shut down the plant in the case of a power outage. Now you can think about it slightly more aggressively in that you can discharge the battery and utilize it maybe further into the evening. So it's really quite an exciting and big investment for us, obviously. We've seen some benefit and hopefully more of that to come in the next couple of months.
And is that what you'll be spending most of your capex, your money on? I mean, that balance sheet really looks strong. Cash reserves are strong, and the company is literally free of debt.
That's amazing. We have that 2 billion rand facility with Nedbank. We haven't utilized that yet, but the solar is just the start. For Ergo, obviously, as you mentioned, from a cost predictability, electricity-wise or power-wise, it was a big investment for us. But we'll be looking to build additional tailings deposition capacity at Ergo around the Withok footprint. And then very excitingly, as you know, we're constructing an 800 million ton regional tailings storage facility in the Far West, together with its related pipeline infrastructure and also a plant upgrade at our DP2 facility there that will take its capacity from 600,000 tons per month to 1.2 million tons per month. So a really exciting growth prospects for us, capital expenditure program in the region of 10 billion rand over the next couple of years. And that's why we also named our results positioning for growth. As you say, we're very fortunate with good operations, good operating results that cash is available in this environment, and we're obviously prioritizing that cash towards this expansive capital program. But at the same time, as you mentioned, the 30 cents interim dividend, which is it's really, we're really proud of that we'll be able to declare that as well to our shareholders.
All right, Riaan, thanks so much for joining us and just taking us through the 6 months that was for DRDGold. That was Riaan Davel, CFO of DRDGold.